Hello, everyone, and welcome to another episode of the Hacking Open Source Business Podcast. I am one of the co-hosts, Matt Yakubit, and I'm joined by Avi Press and our guest today, JJ from OSS Capital. JJ, how you doing today?
I'm doing good, Matt. How are you doing?
Good, good.
Awesome.
Maybe if we could start, could you tell us a little bit about yourself and about OSS Capital?
Sure. So myself, I was born in Long Beach, California in 1989. So I'm 33 years old, and I was homeschooled from the age of 2 to 15 or so when I graduated high school at home. So that means my parents went to the party store and bought a diploma and handed it to me. And then I started working. I learned about open source. I was like one of the early salespeople at this French software company called Talend, which was well known, and they're still around for like ETL software, like data integration, data movement software. It's like kind of a technical enterprise software product. But they had this open source community, and so kind of observed that their way of building products and hiring people and building community was just like really different as an employee there. Just like working in sales, you kind of touch all these different functions and you really get a feel for like what the company's like culturally and structurally and stuff. And then I worked in a couple of other enterprise software companies after that. Really reinforced like working in a totally proprietary software company. You really see how different open source company is versus like a proprietary company. So that kind of stuck with me for a while. And I was very lucky to learn about the Kubernetes project in 2014 and start the very first like Kubernetes startup, like training services tools, consulting stuff. Built a couple of web UI things around Kubernetes, and then I also designed and started KubeCon, which is the Kubernetes community conference. And I was very, very fortunate and lucky to do that, and it was kind of an obvious idea at the time. But Kubernetes ended up becoming this huge project. Zero to me, like next to no contribution to that, but a ton of amazing people from Google and Red Hat, a lot of other companies. And the Linux Foundation created this sort of mini foundation called the CNCF, which is like where Google donated Kubernetes to, and I was involved in that and donated KubeCon to that organization. And then I worked on another startup that kind of died, and it was basically like a open source programming language for distributed systems, like a compiler that would like let you build software without needing to kind of manage all these disparate tools like tracing library and locking server and cluster management and web proxy and all these different things. So like let the compiler kind of manage that, but a little bit too futuristic for the time. Then I started blogging basically about a lot of these observations that I mentioned earlier around like why open source companies are different than fully proprietary software companies. And that blogging kind of led into really like a kind of an investment thesis because over the prior years, I kind of got to know a bunch of VCs and the sort of the conventional kind of VC approach to these types of companies was really clear in that, the VC community at the time was sort of very much like, open source is a really great kind of marketing and lead gen approach. And sort of like, that's it, basically. So sort of like the beginning and the end. And my observations and kind of points of view, and which I'm still kind of, learning more about myself and kind of thinking more about as I've been doing for the last few years, is really that it's much more holistic. And it's kind of like, fundamentally different on kind of all dimensions. It changes everything. It changes, culture and hiring and go to market and business models and, of course, also customer acquisition and lead gen and that sort of stuff. But changes really everything. And so the blogging evolved into, the observation that, maybe there should be a fund or VC focused exclusively on, investing in open source startups and doing nothing else but that. And so I was very lucky timing wise because, sort of the last 4.5 years we've been in, well, notwithstanding the last year, the biggest bull market in the history of money and markets. So I was able to raise our first fund, which is a $50 million fund, and make about 35 investments, and also raise our second fund, which is about the same size, and been investing out of that for the last year. And OSS Capital was started in September 18, and we're still the only fund. We're a very small, very early stage focused fund, but we're still the only fund focused exclusively on what we call open source startups or commercial open source startups. A lot of blogging. Also started a conference that Avi spoke at called Open Core Summit, which we got really busy. We were going to do the third one, and the fund started to get a little bigger. So we still plan on continuing to do Open Core Summit, but started Open Core Summit in late 2019, about a year after the fund was started. And we did the first one in person before COVID, and the second one happened online using Hopin, and that was in late 2020. That was, I think, the one that Avi spoke at.
Yep.
And the third one was supposed to be happen late last year, but things got a little bit busy. But yeah, that's basically my background. We're a pretty small team. It's me and three other people. My partner Heather Meeker and I run the firm, and she's a very well-known licensing attorney with a focus on open source licensing specifically for like 20 years. And, she's really awesome. And that's about it.
Okay. You mentioned you've invested in a lot of different companies. Could you maybe just give us a couple of the companies that, are in your portfolio right now?
Sure. One that's probably pretty well known is cal.com, Cal like UC Berkeley Cal, or Calendar, CAL. And it's basically an application that lets you build an interface for booking your calendar. So you could have like cal.com/Matt or cal.com/Avi, and you give people a way to basically find time and book you in like 2 clicks. So the closest equivalent to something like this is Calendly, which a lot of people may have heard of, or SavvyCal. There's a lot of tools. The difference with cal.com is it's an open source project. And so the whole code base is open. The whole code base is extensible. Anyone can play with it and use it and extend it and build tools around it. And there's a really active developer community, over 100 contributors. It's like a top 0.1%, whatever, open source project, and in the GitHub space, and has a lot of users. And so their business is really interesting. Another company that we've invested in, maybe that you might know of, is in the developer community, like space. It's called Hopscotch. It's like a developer tool for building APIs and testing them, and kind of versioning and iterating on the API design sort of stage before you sort of roll out an API and put it in production. Kind of maybe closest equivalent to, in the sort of proprietary software world, to something like that would be something like Postman.
Yep.
Other tools. So yeah, we've invested in a lot of developer-oriented tools, infrastructure tools. We've also invested in a lot of application-level things. Our latest investment we did last year, but we just announced it a couple of days ago, is NocoDB, which is like an open-source Airtable, which gives you kind of like a smart spreadsheet kind of interface on top of any data store or any
very cool
database. And yeah, they've been growing super fast, and 0 to millions of downloads and that sort of thing in the last year.
With these companies, the theme to those three, at least, it's not the case for all of your companies, is that it's the open source version of X. And so I'm very curious, how do you think about when that's a good approach for a venture-backed business, and when is it not? Like, how do you evaluate when someone comes to you with, oh, I'm building open source X?
Yeah, I mean, it's kind of almost become a meme at this point. Like, there's like the open source version of X as like a formulaic thing. Like, developers are like, oh my gosh, I'm just gonna, the moment this big proprietary, space starts to become like really clearly a thing, I'm just gonna build an open source version of it. And so pretty sensitive to that. We don't actually really go out and try and find the open source versions of big, successful proprietary software products systematically. It's much more like looking out in the world and trying to identify people who are very authentically, driven to create something that is either solving their own very particular problem, or they're just like super passionately connected to it. So like with Cal.com, for example, Pierre, the main founder, was previously running a recruiting startup. And one of the big workflows and use cases in running a recruiting startup is you're constantly meeting tons of people and interacting with candidates. And he wanted to build some customizations and extensions around Calendly, and realized he couldn't because it was proprietary. And so he was like, wow, I'm just going to, there's got to be an open source thing that's kind of like this. And he went to Google and he was like, open source version or, alternative to Calendly. Nothing came up. And he was like, gosh, I'm just going to build this. Same story with NocoDB. Navi, the founder, was building a tool that let you build REST and GraphQL APIs on top of MySQL. And because he just wanted to have a nice interface to be able to interact at the application layer with those different databases without needing to build all this custom infrastructure and, glue between the database and the application. And ultimately he realized, like, what would be more interesting is if you could actually connect that user experience to the end user in a spreadsheet-like interface in a way that a human could understand, as opposed to, making it easier for programmers to like write data to a database. And that's obviously a much more interesting, much larger market in terms of application software. But it was built authentically to solve his initial kind of pain point around, that use case of, building REST or GraphQL APIs on top of MySQL. And so he kind of like morphed the project in that direction. With Lias and Postman, he really just wanted a more performant, lighter weight, browser native version of testing client for building APIs. And it was less about like, here's an open source alternative to Postman. He was like really solving his own problem. Hopscotch was actually originally called Postwoman, and Postman actually like kind of went after him, and he had to like rebrand the project to Hopscotch. So we don't really kind of systematically go out and do that. However, it is our thesis really, like, we think that like, so this is kind of like our slogan. We say like, software is eating the world. We think open source is eating software faster than software is eating the world. So like there's two curves that you could visualize. There's like a big curve of like software eating the world, and that's like a huge curve at this point. There's a sort of a slope on that curve that's kind of starting to slow though, because like so much of the world has been eaten by software. So it's a giant, $10 trillion of value captured by, all the consumer internet companies, all the SaaS products, all the big proprietary software companies. But the area under the curve of open source eating software, it's a tinier, much smaller area under that curve, but the curve is growing faster. So that's basically what we see as a much more interesting and exciting and compelling opportunity. It's not that building an open source company is the only way, and that's the only path to like success, or that's the right way or the wrong way. It's just the thing that we happen to focus on, and it allows us to have a lot of clarity. Going back to your question about like, there's a lot of markets that you could look at and say, if they're large enough and if they're sort of exhibiting certain characteristics that show there's a slowing rate of innovation, or there's perhaps some monopolization or some kind of oligopoly dynamic forming there. Open source is just this incredible force for accelerating innovation, accelerating commoditization, and as a consequence, fundamentally changing market dynamics and characteristics of markets, which obviously unlock new business opportunities.
Right. And so I figure listeners that might be working on their own projects exactly in this space and think that they have struck on one of those areas potentially. When you're talking about how you're evaluating potential investment opportunities, and I think this is very similar to a lot of seed rounds where it's really about like the founder and the story, and very, very story oriented. I'm curious if there's anything, whether it's specific to open source or otherwise, what are you looking for in these commercial open source businesses, and like what metrics are you looking at to evaluate those investments? Like, is it really all the kind of the more qualitative storytelling, or are there other more quantitative things that you're looking at when it comes to an open source project?
Yeah, I mean, it's always some combination of qualitative and quantitative. On the qualitative side, it's heavily weighted on humans and people, because you can't boil down humans to sets of zeros and ones, unless maybe you can. Maybe we're in a simulation in the future. That's a separate conversation.
Exercise for the reader.
But humans tend to be these like squishy, very difficult to express in mathematical terms, kind of beings that you really have to get to know, and you have to kind of understand like motivations, drives, aspirations, inclinations, sort of personality traits. Are you predisposed in a certain way or not? So like that's just really just human relationship development, understanding if we have investing really, and I've been doing it full time for 4 years. It's not really that long. In venture capital, private equity investing in very early stage companies, you typically have like 7 to 10 year feedback cycles to just know if you were kind of right, not exactly right.
Such
and you're
a
never
long time.
perfectly right either. You're never perfectly right. You're only partially right. So like for example, you can invest in a company and they could become, you invested at $100 million valuation, and then they could become a $20 billion company. You're not perfectly right. You're only partially right, because that company, fast forward 5 years further, could have been a $0 billion company, and they were just a $20 billion company because some strategic bought them for that out of fear that they were going to disrupt their core business. But had they not continued to innovate, maybe they would have died. And so like you were only right on a temporal dimension at a certain point in time, given certain execution up to that point in time. This is like why there's like so many false positives in private startups and this tech ecosystem in general, is people just think that like things are kind of consistently exponentially linear and they continue going forever if things continue to grow. And the reality is you could have these like false starts that kind of like wane off, and sort of flash in the pan dynamic where something kind of appears to be working but can't be sustained over a long period of time for a variety of different reasons that are very case specific. So for us, it's an exercise in humility to kind of just go and say what we invest in is a function of aligning with our thesis, which is a very, very specific and narrow thing. It's extremely narrow, and a combination of that with, do we think a huge business could be built over a certain period of time that maps to the constraints that we're operating within, which are sort of 10-ish years. Like each fund that we invest out of has a 10-year life. And so we have to operate within the confines of that in order to sort of say, will that company potentially be a big multi-billion-dollar IPO scalable kind of company within a decade from when we make an investment. And then qualitative and quantitative, most of it is highly indexing on people. Are they humble? Are they mission driven? Are they skilled and technical enough to actually execute the technology roadmap necessary to get to a viable product in market? Do they have self-awareness sufficient to allow them to grow and evolve into many different types of individual as the company grows? It is extremely unlikely and rare that you have a founder that stays the same characteristically, mindset-wise, plasticity-wise, learning-wise over the arc of the company. The reason for that is the company goes from 5 to 10 people to 50 to 100 to 500, and the founder has to evolve accordingly. And if they don't, the company doesn't really succeed unless you bring out, outside leadership joins the company, or people from the inside get promoted. And so the best companies are led by people who are very curious and intellectually curious and motivated to constantly learn and are humble about that. And that's hard to identify. Sometimes it's easy to sort of want to believe that people have those characteristics, but it's extremely difficult to determine if those things are durable without actually working with someone for a long time. The benefit that we have of looking at the open source project is we have some sense of data around the consistency of their efforts and the consistency of commitment and interest in a given area. And so that gives us some sense of being able to go and say, the person is actually very motivated and interested in that domain because they've been actually doing it without being paid or without having a compensation mechanism behind it. They just care. And it just so happens that caring and really being personally drawn to a problem space intrinsically, not extrinsically, meaning extrinsically is like you do it for a payment, and intrinsically is you're doing it for some sort of altruistic reason, or sort of for the sake of art, or for the sake of personal gratification. The intrinsic motivation is really critical to driving sort of like mission-driven behavior, I believe. I personally think that very little mission-driven behavior is driven extrinsically, little to none. In fact, you hear Elon Musk doing these recent interviews saying that like all of his companies are philanthropy, right? Like, sort of like Tesla is a form of philanthropy because it cares about, accelerating a sustainable energy future. Boring Company cares about philanthropy because it cares about eradicating traffic. Neuralink is philanthropy because it cares about solving, cognitive diseases and, people who have, basically paralysis and so on. And so like there's that dimension that we really pay close attention to. On the metrics side, we don't really look too much at metrics beyond the rate of growth. Like the rate of growth is probably the number one thing quantitatively. If the rate of growth is very slow over even a short period of time, whether it's weeks or months, that tends to make some impact on like that things could be less interesting. The rate of growth being, somewhere in the neighborhood of like 5 to 10% per week, or 20 to 30% per month consistently over.
JJ, can I ask a question on that specifically? Like when you talk about rate of growth,
yeah.
How are you looking for people to define that when they're bringing you the pitch deck? Are you looking for? I know some people look at GitHub stars. Some people are looking at Slack users. Some people looking at commit frequency. Other people downloads. Are there certain ones that you say are the growth indicators you're looking for?
Yeah, it's a really great question, Matt. So I have to say first, of all of our core investments, there was no pitch deck, and we engaged with the creators and the founders as humans before they conceptualized a deck and before they conceptualized a business. And so we, in fact, had to actually have a reasonable sense of conviction well before the creators themselves even had the conviction, which makes it even harder. And so by rate of growth, I more specifically refer to rate of growth of external contributors is something that really matters and is very interesting. Rate of growth of GitHub stars is probably one of the least interesting things because it's a very, very thin sense of sentiment and sort of popularity. It's not completely, lacking of some insight in terms of the proxy for, developer excitement or, diffusive interest. But I think that on its own, it doesn't give you a strong proxy for actual usage, actual adoption. I think Mitchell was actually just tweeting about this, the co-founder of HashiCorp pretty recently. He used the physics analogy of potential energy and kinetic energy. And I believe he put the GitHub star metric in the potential energy bucket as opposed to the kinetic energy bucket, which is a very strong way of sort of categorizing and classifying different types of metrics. I'm not sure if he did this, but I would certainly put the contributor and the rate of growth of contributors in the kinetic energy bucket, meaning it's something more immediately visible in the sort of like immediate spectrum of stuff that affects the momentum of something, like from a physics perspective. I don't know, like other metrics that we look at are sort of the rate of the rate of development execution, which frankly kind of boils down to like the number of commits you're making into the repository on a monthly or weekly or daily basis. Like that's also very gameable. Like you could have a bot that's just like making small single line commit changes.
Though how often is that being done? Like, mostly it's
also easy to spot. If you just look at repo and you don't even need to be a really sophisticated programmer to like see if there's it's not a human actually making those contributions. So I think rate of iteration, rate of kind of not necessarily improvement, but like rate of change, rate of adaptation is a very, very valuable measure and proxy, even if it's a single individual in the project. Just really dedicated to improving things at a fast rate. That's another really big signal we look at. But going back to Avi's question, like I think the number one thing is people. Like at the very earliest of stages, it really does boil down to: is this person highly mission driven? Do they have? We think the technical skills and the personality traits necessary to manifest their vision from a 0 to a 1 state, and then from there, do they have the sort of raw ingredients needed that we think constitute enough that would allow them to grow into a person that would be extremely inspiring and motivating to lead an organization? That is often a leap of faith. Most people do not have that, especially first-time founders. They do not have that. They have to learn those things. They have to learn how to be an inspiring recruiter, an inspiring magnet for talent beyond themselves. They also have to learn how to grow into like doing literally everything and wearing all hats, to hiring people who are specialists in different domains and enabling those people to be successful. Like those things you have to learn as a startup founder.
Yeah. And let me dig into a couple of those things that you said. You said a couple of things that really intrigued me, and I actually got my pen and paper out so I could write them down. A little old school there, but that's okay. So when you're talking about, the founder throughput and their ability to adjust, are you like seeking out like projects where you see active founders then? So are you looking at, the founders commits, how much they're contributing to the code in the project, and then approaching them directly and saying like, oh, have you ever thought about this as a business? You also mentioned you're not really doing pitch decks. You're starting before they even thought about this as a project.
Yeah, absolutely. Okay. Most of the time, there's been a couple of exceptions, but most of the time we identify something just by constantly looking at the open source community and new projects that are coming out and things that like look interesting objectively. And then we basically cold outreach, introduce ourselves. And I'll personally do that most of the time, like on Twitter or email.
That's very cool.
Or LinkedIn, the response rate and the sort of engagement rate is kind of 100% most of the time, because we're super unique, and we're not really viewed as venture capital, and we're not viewed as this sort of like trying to extract information and for the sake of some particular agenda or something. Like we're actually very interested in, like, broad mission is like to encourage, and you mentioned this word founder. They're not really founders at that point. They're just open source maintainers. They're open source engineers. They're like, there are software developers out there on the internet, like building their stuff in the open with open source. And so like going in and introducing ourselves to them to say like, hey, you could actually be a founder of a company, own the vast majority of it. We'll fund you with, N numbers of millions of dollars, and you'll be in control of that company. We'll help you build a business that can do two things. One, allow you to sustain and grow your community and your project more systematically than you would otherwise through donations or through some other approach. And two, if you're successful in actually building a business and a commercial enterprise, potentially allow you to create a huge amount of personal wealth as well as contribute back to the world in a bigger way, and creating a lot of wealth for other people as well. Also us, but also the employees of the company that you build. And so it's a combination of helping open source creators realize that they could become capitalists and founders of companies, while also continuing to kind of be, this is not the right characterization, but sort of socialist communists in building out the open source, communities, and continuing to do that. We also have a very, very high level of, I guess opinionation is the word, on open source and what open source means. And so every investment that we've done, we actually strongly encourage. We don't have control over this, but we encourage and we recommend that the projects remain open source licensed forever, meaning from the time we invest to the time that the company, over time, becomes huge or not, whatever happens, like continue to maintain an open source license, which means something very specific. There is no other VC on earth. I've actually kind of more recently realized this, and I've thought it was sort of more safe to say, there may not be another one. Concretely, categorically, there is no other VC that says we want you to be very committed to open source with permissive licensing at the core of your technology forever. Like, we would like you to do that. In fact, the reason that there is no other VC is this is an extremely counterintuitive thing to do as a capitalist, because it introduces massive uncertainties and complexities in terms of how you'll be able to monetize your technology. But we like to think that there are enough provable cases where this is not only possible, it's better for the world, and it's actually a more sustainable way of building companies.
So JJ, let me ask specifically about that, because this is interesting, and we were going to talk about this in a bit. It was on my list of things that I really wanted to dive into. When you talk about that open source forever, that's great, but the definition of open source seems to be a little changing. When we talk about licenses, and I don't know where you and the OSS Capital folks fall on this, but we've seen new licenses kind of come into the space, and there's a lot of questions on whether they're truly open source or not. Some call them eventual open source available. We've seen BSL, SSPL, Commons Clause. There's other things that have started to kind of float out there, and I'm not negative on any license personally. I don't like when people start as open source and they give something away as like Apache, and then all of a sudden, nope, we're going to restrict everybody 5 years later, right? I think that leaves a bad taste in a lot of contributors' mouths. I'm curious your take on that, where you see this. Again, I'm happy with any license somebody wants to go with, but where do you draw the line?
Yeah, so our answer to this is unfortunately very nuanced, but at the same time, it's actually
good.
So the top level thing is going back to our thesis, which is kind of like the Billboard slogan version of like slogan version of what constitutes like our whole mission and purpose, which is we think software is eating the world. We think open source is eating software much faster than software is eating the world. Mm-hmm. That's those two curves I mentioned earlier. In order for that to actually make sense and mean anything, open source has to have a very definitional, concrete meaning behind it itself. And you mentioned something which is, maybe there's the open source definition is starting to evolve and change a little bit. I actually strongly disagree with that, and I don't believe that that's actually happening for a lot of kind of very concrete reasons. But primarily, open source itself is built on these four kind of rights frameworks, primitives, if you will, otherwise known as freedoms, which that word freedom is a bit, subjective in a lot of ways. And I think, we had to sort of change the original construct of what open source was from free software, built on this word freedom, which has very loose meaning in different kind of linguistic contexts and different language contexts, to this thing called open source, which encapsulated all of those four freedoms, but sort of rebranded and distanced itself from the creator's highly ideological motivations, which is by the creator. I mean, Richard Stallman in the 80s, who invented the free software framework and the GNU, tool chain, as well as the free software licenses themselves. So we believe open source means something very specific, meaning it's a fundamentally rights driven discrimination free framework applied to source code, computer source code. So, it basically says, without discrimination to any entity or human, you have the ability to see the source code, modify the source code, distribute the source code, and basically commercialize the source code with or without the changes to the original source code. And there's open source licenses that fall within those core tenets with some degrees of kind of permutation in terms of how trademarks are treated, or in terms of how attribution is treated, and or in terms of how reference rights are treated in patents and so on. But fundamentally, those four rights are encapsulated. There is a new branch of sort of an in-between fully proprietary software licensing and open source licensing that is called source available. And a lot of people call this sort of pseudo open source, or maybe the open source definition is stretching. It's actually not. This is a new class of licenses, which are sort of an in-between. And my partner, Heather Meeker, has actually been the primary attorney and licensing expert in the world of the legal domain, to have contributed to designing a lot of these licenses. You mentioned one of them called the BSL, which was written for MariaDB a decade or so ago, which is a temporal, time-bound license that says in the beginning it's source available, meaning only one company can monetize, only one company can control and contribute to that code base. But over a certain period of time, after maybe a certain release cadence, what have you, then the code base flips over to being, at that point in time, open source, meaning it could be Apache or MIT. It's actually a very nuanced license. It's not open source. It's a time-bound, initially source available, eventually open source license. What we see, which kind of goes against the narrative based on the data, which is observational, like looking at data, it's not really our opinion, is we have a database of about 500 or so of the most widely recognized and sort of understood to be up and coming open source companies, commercial open source companies. And something like on the order of less than 8% of those companies use a source available license at the core of the technology, which would actually go and say they're actually not technically open source. They're sort of, proprietary software companies that have a pseudo open source license at the core, source available. We still classify them as open source because they operate very much in that kind of framework. And that increase has definitely been, notable in the last kind of few years. There's been a lot of new startups that have just chosen, like, from the beginning, instead of Apache or MIT, I'm gonna use one of these source available licenses. So that's definitely a decision point, but it is so fractionally small as to really not be justifying this sort of narrative of like, there's this huge movement towards like all the open source companies moving towards using source available. It's actually a tiny, tiny, tiny fraction. The vast majority still choose a very permissive license from the beginning. Now, there's a flip side discussion to this, which is like, after a certain point in time in years in the future, how many of them will want to do what Elastic or Mongo did, which is change the license in the future after they've reached a certain amount of adoption, critical mass, community, value. And, that's really kind of an unanswerable question so far, because frankly, the category is so young. We haven't seen the category grow enough. By category, I mean the type of companies that this represents, commercial open source companies, which there's like literally there's around 1,000 of them maybe in the world. We have like extensive data on like 500 of them. There's not enough data to be able to say, are we going to see a full scale transition from very permissive open source licensing to source available? My sense is we're not. In fact, I would propose, and I think this is probably the clearest I've gotten on this pretty recently. So thank you for giving me the opportunity to kind of express this. I think the mechanism that is a source available license will actually, in fact, serve to be a transition point into more open source, not the other way around.
Which so it'll start as SSPL or source available and then move to open source later.
Yeah, I actually think that that's more likely what will happen, because the sort of the size of the space of proprietary software that exists as part of all of the trillions of dollars of value captured is much larger than the size of space of open source that constitutes commercial open source companies. And so if in fact we're relatively correct about the open source is eating software faster than software is eating the world, two areas of the curve, it follows that source available could actually be a way to go and say, for existing proprietary software company incumbents, look, we're actually going to maybe gradually take some of our product and source available license it, kind of like how Unity does with the Unity game engine. And then over time, they're going to be able to say like, wow, there's so much stuff here that's kind of non-business differentiating. Like, it's not going to really matter too much. Like if we actually just like fully open source this, like we're still going to be able to generate the same revenue. We're still going to be able to build the same products and services. People are going to pay us for those products. So they're not paying for the source code. They're paying for the product experience. They're paying for the differentiation they get from that experience. And I think over time, what we're going to see as source available is used as a mechanism to expand the amount of open source as a further transition from that, and not shrink the universe of open source more towards proprietary, which is kind of the broader narrative, which I think is kind of the exact perfectly inversely wrong way of looking at it. I think over time, what will happen as a subsequent step from that is the industry will go and say, wow, maybe source code itself actually doesn't have any value. Maybe we can just kind of open source really everything that we're doing and in fact just build valuable products and services and charge money for those products and services, and people will continue paying money for those products and services. I would argue for the vast majority of consumer software, for example, you could open source almost all of it, and the consumers would continue paying money for the products and services that are generated by those pieces of source code, right? Like the Zoom client, the Riverside client, like all the application software we use. Consumers do not have the level of sophistication to care or to, cause disruptive, phenomena for those businesses. They're just going to continue paying for the products and services. They don't have the ability to go and like marshal the source code and like prepare a binary and build it for their different client experiences. They're just going to continue paying for the software. And people pay for the software because of convenience and a differentiated experience. They do not pay for software for access to the source code. So my belief actually long term, which is like a much more kind of controversial thing maybe to say, is that I think the biggest lie actually ever told, which continues to be actually believed by the vast majority of the industry in software and digital technology markets, is that source code has any value at all to begin with. In fact, I think it does not have any value at all. And so as a consequence, if you open sourced pretty much almost anything, I don't think that markets would like collapse and like fail, cease to exist. What I do think instead that would happen, we would have a far greater pace of innovation, a much bigger magnifying glass put on the actual sources of innovation where things are occurring, and a far higher sort of accountability standard in terms of how those innovations kind of occur.
Isn't some of this though driven because of this fear? I mean, it's the fear of the cloud, right? It's that article that came out a few years ago on the strip mining. Everybody was like, "Oh my gosh, the cloud providers, they're taking all of the open source," and so that really generated this movement to how do we exclude those cloud providers from taking our software and then running it on their own. But it also led to a lot of open source companies not trying to necessarily commercialize their open source as much as their as a service products, and sometimes using the open source just as a gateway. What would you say to a company that's looking at the big cloud providers and going like, I don't want them to steal my stuff. How do I prevent them from stealing my stuff?
Yeah, so a few comments there. So Salil Deshpande is the guy who wrote that article, and he's someone I know, and he's categorically wrong, both in terms of his framework for thinking and his conclusion chain that led to writing the article. And he's also wrong in terms of the actual arguments that he's constructed to write that article. Thirdly, I actually believe that the subsequent, sort of as you characterized it as a quote unquote movement that occurred, is actually not a movement. It's sort of false successive conclusions from a previously false logic chain that motivated that piece of characterizing cloud providers as strip mining the business opportunities behind these open source companies. I think I'll kind of unpack that very briefly before going to answer your broader question. The reason it is fundamentally flawed and sort of like, cognitively, laughable to say that the cloud providers are capturing sort of all of the value or too much of the value in open source is as follows. You have open source projects that have served as the basis for creating basically every major internet company and SaaS product that exists under the sun since the rise of the internet, in the 80s and 90s, in particular the early 2000s to today, which is about, over the last 20 years. The value captured in aggregate by all of those companies measures in the tens of trillions of dollars, Cloud providers overall are maybe $1 trillion market today. If you look at the sum total of AWS, Azure, and Google, and maybe $1 trillion or so. The value captured by technology industry as reflective of market cap has already far surpassed any of the value that you could go and say the cloud providers are capturing. And by the way, that's been done without any pushback, without any vitriol, without any similar strip mining type posts. And there's one simple reason for why that is. Because it's been indirect, it hasn't been direct. And what I mean by that is when you take an open source project and you include it in the dependency graph of your product, when you're building a product, and in that dependency graph, it is a critical dependency and fundamental to being a system of record or a core library that's doing rendering or a core library that's doing something fundamental that you didn't have to write from scratch. By the way, that could be the compiler, that could be the database, that could be the application framework, that could be the tracing library, it doesn't matter. An application software vendor exposes the product to the consumer, and the customer pays for a set of abstractions that have been compiled and stitched together by that application vendor. Could be an internet company like Twitter, could be a software company like Salesforce. And they do not care about those core libraries that are made up of that product. All they care about is the product. They're going to pay money for the product, right? And so at the same time, what's happened is the open source creators behind those libraries have had enormous benefit and rising of a tide and validation and contribution and battle testing of their code because it's powering the entire internet. It's powering the entire SaaS infrastructure marketplace that we see today as today $1 trillion market. Last October it was a $2 trillion market, so prices have come down by about half, but it's still $1 trillion category. Internet application software and consumer services is another 3 or 4 trillion, and then you have to kind of count up all the major internet companies is another 4 or 5 trillion. So in total, it's north of $10 trillion in total value capture across the entire digital economy of products and services. 90% of that is made up of open source. 90% of it, probably more. And so we haven't seen any pushback to that phenomenon. And so that's where I would say the argument is just very deeply flawed, which is, the cloud providers are capturing too much value. We must discriminate against them and change the license such that these poor, helpless, ignoramus open source maintainers can somehow capture some value. I think that is equal parts condescending, phenomenally poorly constructed and flawed as an argument. And I'd actually strongly encourage you to watch a nearly 2-hour keynote conversation that I actually did with Salil Deshpande, which I feel very few people have actually taken the time to watch because this is a very extensive discussion in a respectful way. And because I do believe Salil is a very smart and intelligent person, but his cognitive logic chain is so deeply flawed, it's quite laughable in my mind. I would encourage people to watch that. Sort of going on from there. I think that what we have seen as a massive sort of validation point for this way of building companies is there is no need to discriminate against commercialization in order for your business to be hugely successful. What you have to do though is embrace the pace of innovation that is forced upon you by a much larger surface area of collaboration and competition. And when that happens, all it does is it benefits everybody. It benefits the consumer, it benefits your competitive ecosystem, it benefits society, it benefits the technology, because the technology is pushed in a much more productive direction than it would otherwise. It really benefits everybody. It does make capitalism and sort of value capture, frankly, a lot harder. But this is just going back to the fundamentals and basics of capitalism. Like, pace of innovation is the only thing that actually matters. The moment you start to slow your pace of innovation, you become vulnerable. Maybe you've built this monopoly or this oligopoly and big profit stream. But at that point, you're going to get disrupted by someone else, or you're going to have to disrupt yourself. The only thing that open source does is it accelerates that by a couple of orders of magnitude, and you have to kind of be comfortable with that phenomenon.
Yeah, I mean, that's a great point. I just, I agree completely that it is kind of a weird spot, and I don't believe that it is, the strip mining effect. Avi and I have been talking about that for months and months now on various channels. So yeah, we completely agree.
But I think, like, overall, the idea that value capture is more challenging in this space, I think, it just is, due to all of these, the way that we are shipping code to each other and all of these values. And so I'm curious, with your portfolio companies, are you seeing particular challenges that are unique to open source companies that seem to be common across these? So I'm curious, what are these challenges, and how are you helping companies through them? How are you seeing companies work through them? Talk about that a little bit.
Yeah, I mean, so I posted this maybe a couple months ago, and I'm not sure if you caught it, Avi, but it's a really good, reinforcing pitch, frankly, for Scarf and what you're building. I'm not sure if I actually called out Scarf specifically in that post, but what I find to be the most common thread of sort of structural difficulty for all emerging commercial open source company founders is that from inception, these projects are built, distributed, maintained, and iterated on via a centralized, closed social network owned by Microsoft called GitHub.com. And on GitHub.com, we have certain data and certain artifacts of information that give us a reasonable sense of sort of the metadata of activity and sort of energy that exists around these projects. But we don't have anywhere near the amount of information and insights that you would get, say, if you were, frankly, building a fully proprietary widget. And for anyone to use that widget, they have to sign up on your domain with an email and sign up for a freemium account. And every click, interaction, context switch, a data mutation that they do within that piece of software that you wrote, you have forensic visibility into, right? And so there's a big spectrum. I think of everything in terms of continuums. Nothing really is binary in the world except, the open source definition and maybe death and taxes, and maybe a few other things. But you have fully proprietary SaaS products like Riverside, the thing we're using today, or Zoom, that have forensic telemetry and detail on every single click, stream, bit, byte, packet of information going through that software. And frankly, you're able to have far more knowledge and information about how to improve that product experience than you would otherwise. With open source, it's the complete other end of the spectrum, where you build this piece of software, you distribute the software somehow, whether it's on your own Git repo or on GitHub.com mostly, or on Docker Hub, and the software gets downloaded, and then you're not able to actually understand how it's used. You're not able to understand where the user is running it in terms of the system configuration or the operating system. You're not able to see how people are operating and interacting within the software, which functions they're invoking, how often they're invoking them, and so on. And what that causes is this fundamental disconnect and gap between the product creator and the product user feedback. So as a result, the most common structural set of challenges is this kind of like degree to which you can shorten that gap as close as possible in order to get closer to your user, closer to the source of feedback and insight that would allow you to improve your product in different ways in different contexts, and frankly just get a lot more insight and information from the software user and in order to build something more tailored to them in whatever domain. It could be a customer, it could be some vertical specific thing, it could be a particular type of engineering domain, whatever. And so what I find as the number one challenge is sort of navigating this. We've launched the project on GitHub, we've gotten some trending activity, we've gotten a community, it's really exciting. Now how do we go and connect all the missing data from that environment to basically domains and assets that we control, like on our own web properties or on our own distribution mechanisms, and get closer to the customer and collect more information that would be helpful to them without becoming too tempted towards going and saying, open source is so great, it's given us so much enormous leverage and efficiency, but we really hate the fact that we don't have all the telemetry and information on how people are using our software. And in fact, not just how, but who is using our software, and the identity characteristics of all of those people, and how many people are they, or how many instances are they, and how many machines are they, and how many API calls are they, and so on. So there's this giant space of complexity between taking an open source project and building a lot of activation energy and momentum around it, and then at the same time building a similar set of momentum and activation energy and data and engagement with potential end user customer that will maybe over time want to pay you money for your product experience. But it's a perfect incentive structure aligning. They're paying you money. They want you to actually have a lot of insight into how to make that experience better. But yet, if they're just paying you money for the open source through a support contract, implicitly there's no incentive system that allows you to connect to their environment and get data from them. So this is why you have a lot of open source companies going and saying, let's just build a cloud service from day one. Personally, I actually think that that's a flawed conclusion in all cases, because you could have some situations where there's going to be a huge market for you to build the enterprise product version of that and sell a subscription on premise or on the colo facility or in some VPC. And there's a better version, there's an enterprise or a pro version or whatever of your open source that you could ship just as a binary. Maybe it's source available, maybe it's totally proprietary. That's also totally fine. And you can charge money for it, and then you can get a lot of telemetry and data from your customers that way. So it's a lot of this is case specific. It's very, very complex. There are answers to a lot of these things. It just tends to be very bespoke and custom, and how these sort of problems are addressed. And we have 20 odd major investments in companies that we're very close to that are going through these types of problems in different ways and shapes and forms, and they're sort of solving them in different ways. And I think that the next kind of iteration of this category is going to be where people start to standardize, and sort of tools and services like Scarf emerge that contribute to kind of making these problems less painful and less complex, but as well just kind of better patterns and practices and observations in the industry that become better understood and more widely appreciated, and then so maybe some more common patterns and solutions emerge as well.
Yeah, it's interesting because you mentioned the enterprise versions, and there's a lot of companies who still don't want to invest in the as a service, especially for their infrastructure components. When they've got other infrastructure components, they're building their own private clouds internally. They want to implement that, and that telemetry data is so important for the end users, but it's almost a taboo thing to ask for in some open source, communities. I mean, Avi, you know this because you've experienced this as
Very
well.
Yeah.
But yeah,
and I think that's why open sourcing these exact initiatives as well is going to be so important. And we'll look for some stuff from Scarf in this exact vein coming up soon that I'm very excited about, but I won't say more yet. But yeah, I mean, the reason all this stuff is just so important is because when we talk about more, although be it small number of companies using source available kinds of license, we just need to do as much as we can to best set up open source companies for success systemically in many kind of different ways. And I think if we do that, we will see a lot more success with these open source businesses, and ultimately just a lot better software for everybody. For
totally
sure. Yeah. Yeah, Matt, did you have any other questions?
Yeah, let me ask you this final question, because this is interesting. This gets back to not only these growth metrics, but it also talks a little bit about maybe one of the things that I've seen as a challenge, right? So adoption of open source in the open source space does not necessarily equate to commercial success. Like getting the right commercial playbook in place is critical. Just because you have millions of downloads or thousands and thousands of contributors doesn't mean that you have the capability to monetize that without having the right systems in place. And I think that's really a critical thing. JJ, you had mentioned earlier how you're starting to look at those, contributors as an early indicator, which is great. I was curious, what advice do you give to people who have those early contributors to turn that into a commercial success?
I think a lot of it is not rocket science, and it's not some new magical playbook. By the way, I think generally the idea of commercial go-to-market playbooks in the world of commercial open source companies is extremely dangerous for really one main reason, which is that as a company goes from an open source project to a product or a set of product experiences, which are things that you charge for, and you have customers paying you money for in order to use them, as opposed to open source where there's this completely permissionless dynamic where everyone's doing anything at any time and you have no information. You often go through a highly evolutionary and iterative way of experimenting with monetization strategies. And I know that sounds like a big complex ball of wax, but like it just is what it is. Every very successful open source business that I've studied, commercial open source company that I've studied over the last several years, went through many different ways of iterating on how to attract and acquire their first customers through charging for plugins, services, enterprise version, some version of a cloud service or a managed API. It could have been something more specific like what GitLab does, like this buyer-based open core approach where you have like 3 or 4 different ways of monetizing based on user personas inside of an organization. It could be just like, here's the a la carte enterprise or pro or premium version of each open source tool. And we go and basically identify, HashiCorp did an investor day recently and is really excellent at articulating this for just public market investors today, which is they have this like practitioner end user audience that they build and nurture continuously forever. It's not one time static thing. And then that feeds into accessing a buyer customer persona, which is a different buyer persona and different constituency than the persona of a practitioner or an end user. And the buyer is often a decision maker in an enterprise, or it's a CTO or CIO or a VP of IT or some person with budget and or access to a budget inside of an organization. And they have different sensibilities, different ways of making technology purchase decisions, different ways of understanding the value proposition of products and technology and the impact that those technologies have on their organizations. And so I think that it's very incremental and iterative. Each one of these companies is quite unique in terms of how they monetize, and it takes a lot of humility to kind of understand, like, exactly as you said, some projects have massive amounts of adoption and they're really not able to be monetized or commercialized in different ways. There's one kind of structural thing that I would say to kind of wrap that up, which is, there's actually hundreds of millions of open source projects out there, like on GitHub. Maybe there's 50 million or so that are like actual projects, but last I checked, there's a few hundred million repos on GitHub alone. But let's just call it 50 million or so, are more than just a single init file or like a README. Like they actually have some code that does something. We're talking about tens of millions of quote unquote ideas out there. The things to us that could constitute the basis for a large potential business over time fall into one or two or both categories, which is that the software touches, reads or writes data, meaning it's a system of record at the sort of data persistence tier, or it's a system of intermediation and it proxies or intermediates data at the network persistence tier, meaning it's sort of like a proxy or a message bus, or some kind of middleware abstraction of some kind. But it's still interfacing with or touching critical data of some kind. If the project is not in either one of those two types of areas, and it's in the much more ephemeral domain where it's not really touching mission critical data, but it's sort of like a library or an ancillary thing, the likelihood and the propensity for that project to be the sort of core basis for a large business is very, very low. It's not impossible, but it's very, very low. Whereas if the project instead is reading or writing data in some kind of way, shape, or form, meaning it's application or it's a database or something, or if it's intermediating or proxying data at the network tier, or both, has a higher probability or a higher propensity potentially for being the basis for a potentially very large and valuable commercial open source company. That is a technical distinction. Both of those abstractions I mentioned are completely orthogonal to vertical, to layer in the stack, to any of these things. Those are very like technical kind of properties. And so we pay very close attention to those. Every company that I've like looked at that we've invested in either maps to those, one or both. And every large and successful open source business in the public markets today are the ones that are growing really fast in the private markets that are, well onto 100 million plus in revenue and so on, also map to that. It's just really important to be, controlling and managing the way you intermediate and or generate and or persist and store data. I think the final thing that I would say, which is something I'm thinking a lot about, is this world of neural networks and transformer models and attention networks, and everything coming out of Stable Diffusion and frankly the Oracle Microsoft that is OpenAI, which is not really OpenAI. Frankly, the world of neural networks is getting so sophisticated so fast that we will very likely see software engineering disciplines become automated to the extent that software developers start to resemble more like artists and creators in the graphic design world than they are, actually sort of translating natural language instructions from product managers down to, computer source code and writing source code themselves. I think the engineers and architects of the future are just going to be really, really good at translating abstract kind of high level concepts of what some software needs to do in terms of language the computer understands using natural English, not C++ or Python or Java or JavaScript code, or Rust code if you're a Avi or a Haskell.
Yep.
Programming. There's semantics and ideas in those languages that are really valuable, but to express them in natural English is actually very counterintuitive and difficult. That is the domain that engineers will serve for a very long time, because it's just difficult to communicate the abstraction boundaries. So I think whoops, it's my phone again. I think a lot about the machine learning and the neural networking stuff, and that's probably where a lot of the software development practices are going to be headed in the future.
Awesome. Well, JJ, I want to thank you for hanging out with us.
Sure.
It's been a pleasure chatting with you about this. And we really do appreciate you hanging out with us today.
My pleasure. Thank you so much for having me, guys.